In this video, I will walk you through the key takeaways from the central bank's second inflation report of the year, their latest messages on the future monetary stance, and how this affects our macro expectations. To start, the central bank held the interim inflation targets unchanged, keeping the point target at 24% and the forecast range at 19 to 29% for the year-end. They emphasized the risks to the inflation outlook remain tilted to the upside for now, largely due to unanchored inflation expectations. As a result, they reaffirmed their commitment to a tight monetary stance. At the same time, they made a slight upward revision to output gap projections, now suggesting a growth rate of around 3% for 2025, a sign that a soft landing remains as the preferred scenario. In this respect, the bank outlined two potential paths for monetary stance. The first involves keeping real interest rates relatively high while easing credit growth caps moderately, possibly in a targeted way, particularly towards SMEs, as seen with the recent extension of the credit guarantee fund limits. The second path would see credit conditions staying tight for longer, while allowing for lower real rates over time. Overall, we evaluate a significant opportunity window has opened for the central bank. Much faster decline in the underlying inflation trend, stronger accumulation of reserves, especially with the tourism season gaining momentum, and the gradual build-up of policy credibility, which can help anchor expectations if they continue to act with caution. Their recent efforts to sterilize excess lira liquidity show that they remain prudent. To sum up, based on the central bank's latest communication, a rate cut in the June MPC meeting cannot be entirely ruled out. However, we think it's more likely to initiate a carefully calibrated rate cutting cycle starting in July, at a time when real interest rates would be historically high. We maintain our year-end inflation forecast at 31% and continue to expect a real interest rate buffer of at least 4 to 5 percentage points, considering the uncertainties that still lie ahead. Thank you for listening.